All right, good morning. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday, the 11th of July. I am late for it because I was having a good conversation with a client that I got into. He's just willing to say, hey, I can blame it on him, but the reality is someone that could keep track of their time a little bit better would say something along the lines of, hey, I've got to go. And I would have prepped them ahead of time that at 9:55, I got to get going. I did not do that. My fault. So let's get started. In all reality, earnings are coming up. So I would be looking to be in caller trades or protective puts. But there's a problem. If you're doing it on a small account, you and you take a look at these. Let me open some of these up. I'm going to run into a problem. All those other ones are called. What's my problem looking at this account? There are two things, but what's my problem looking at this account? And if you don't know, type something in and a couple question marks, and I'll tell you. There you go. So there come a couple question marks. There are 14 of us here today. What's the problem with this account? Because there is a problem. Pretty glaring. All right, I'm going to tell you. Do I have any stock ownership in this account? Cash poor. Great way to say it. I don't have any stock ownership in this account. Yeah, it's my small slush fund account. Boy, I can't believe I've pulled out of it like 14 grand already. My cash on deposit is only $1,800. I cannot go into true margin because I don't own stock ownership. You can't do margin on options. So I need some stock ownership in here to be able to use some margin. So this account gives me a problem. My little slush fund account has no stock ownership, sold off my Under Armour and so forth. Only options which are not marginable. So it acts like a cash account, which means I need to find a stock / in the money covered call / protective put stock ownership earnings play. And it has to be something that's cheap. If I was to go to my watch list, right? Come on. If I'd have to go through my watch list, AOBC is cheap, but it already had its earnings. Ford is cheap. I like the idea of going into a Ford protective put. So I could get some Ford in here, maybe 300 shares of Ford for earnings on the 24th. FCX is cheap, and it has a dividend, ex-dividend date tomorrow, with earnings coming up on the 24th. So really, if you were going to ask me, can get up to 15, had a hard time getting up to 12 and a half, a good position for this portfolio for me would be 300 shares of FCX, adding an $11 put. $11.60 on the high side wouldn't be bad. Midpoint it. This would be my position. This would be what would be good for me in my account based on the size. You can hear the chickens in the background, I think. They're cackling. Because of where I'm at in my account, this is a great position for me to be in that will protect this account, yet still give me the opportunity to have some margin to continue placing other trades. Now, looking at it a second way, what else could I do with this account? I've got a pretty good profit on Disney. If I wanted to free up $4,000, what I paid $13.85 is worth $20.05. I could sell off my calls on Disney and really make, a 30% profit. Would anyone do that? Would anyone do that? How about hell no, because Disney knocked it out of the park? I could, and I have been getting out of Facebook calls. Now, the first one I got out at like $18. But it had a cost basis of 27, 28, 29. So I took like a $9 loss. It had to be 27, almost a $10 loss. First in, first out, right? The second one I sold off to give me some cash in here was awesome. It was a $13, it was a $16 one. I sold for like 20. And now I have my cheap dollar cost averaged ones, right? $6.95. That I'm killing it. But would you get out of Facebook right now? Is this the time to free up cash from Facebook? Well, it just got above 200. Hold on. Got too much going on my screens that it won't work for me. Just got above 200. Broke above it. No double top. Broke above it. Why I like Facebook so much is because here we have 220 not too long ago, last year, when it had calls for 280, 295. I hate being stuck in Facebook, but the upside warrants me staying in that position. Would I get out of Visa? Probably not. Visa's my cash cow. Could I book 100% return on my covered calls? I could. But then I am ridiculously cash, and then I have I'm unbalanced. I then don't have a financial in this account. Some of you are going to say, and I just had this conversation with someone else, well, you're already unbalanced. You already have no oil, no energy, no health care. Yeah, but those ones are kind of sucking nuts this year. Those aren't good ones to be in as a whole. There are some individual ones that have come back nicely, but energy, healthcare, those sectors are doing horrible. Well, Kevin, what if you use some of your other accounts? What if you use some of your other monies, right? Well, other monies, I'm stuck in 500 shares of Baidu. Other monies, I'm glad Schwab doesn't show how much money I've made, but on my stock ownership, it's down $57,000. The good news is I've made up 55 of that. Doesn't look nearly as bad as it needs to be. I'm in 80 contracts at Bank of America. I have Marvel Technologies. I've got Under Armour. I've got Disney. I'm doing awfully well. I don't have a lot of cash in this one either. So right now, one of my issues is that I am cash poor in accounts. I'm in cash poor in accounts that in all honesty, I'm okay being cash poor in. I'm okay being cash poor because this has been our market. Other than the blip last November, this has been our market. It's been a bullish market. I want to be cash poor. I want to be participating in the runs. I want to be in a market that looks like that. In stocks that look like Visa. That's a damn good chart. And stocks that look like Disney. Well, Kevin, that chart doesn't look nearly as good. When I see that chart, I'm loving it. Look at those opportunities to make money on the downside. It's been a great position to be in. In stocks like Baidu. Woohoo! Free fall, 284, 288 intraday, all the way down to the lows at 106. I've got a ton of cash to put into Baidu that is a China deal away from being at least up to 165. And there's no one that can tell me China can't get back up to 280. I'm going to pull Bank of America up out of E-Trade. I made this comment recently as well. Kevin, why are you so hooked on Bank of America? Well, Bank of America has some runs in it. It didn't happen last year, which is kind of a bummer. Bummer for me, right? But in 2018, you get this run from September through the end of the year. And we're literally looking at $22 up to the highs of 32. You get this run in September, August, September. This one's the end of September at 14 up to 23. 2015, August 26, 14 up to 18. August 4th, 1498 up to 18. This one was in June, but usually happens here. I'd have to go out to July 27th, 13 up to 17. August, this is July 24th, 676 up to 12. This is why I'm in Bank of America. This is why I'm looking for opportunities in Bank of America. This is why on my slush fund portfolio, I am literally in these positions that are small, but looking for those big killer ups, looking for some good opportunities to make an amazing killing in those stock positions. And that's why I'm doing it what I'm doing. Looking into this position, if you're going to ask me for a trade today, FCX is where I would be. FCX, protective put for a small account. I am doing it because I need it for all honesty, I need it because I need the margin in my account. I don't have the margin in my account, but that would be a relatively cheap trade for me to be in. And it margins me out so I can go into margin up to, you know, $3,300, which helps my portfolio because, as it was so eloquently put, I am cash poor. I am cash poor and I am not ready to take profits on some of these positions. It's just not what I'm looking to do. I want to, if anything, I want to add some more. So that's what I'm looking at today. I do apologize for being late. Any comments that anyone would like to say in regards to the portfolios here? Any questions, any comments? Oh, I just saw someone that just jumped in. If I can take a couple minutes here, can I go ahead and compare a couple stocks for you? That person that just jumped in called, left a message yesterday. Let me do a little quick comparison. Glad you jumped in. So here is a question for you. Baidu versus Baba. Which one is better? Okay, Lance typed in he likes Baba. Why? Why do you like Baba? look at a chart. Let's look at a chart. I will look at a chart. Looking at a chart. Alibaba. Oops, one little far. So Alibaba, for all intents and purposes, IPO'd in September-ish of 2014, roughly $100. 15, 16, 17, 18, 4.5 years later, it's trading at 167. So in 4.5 years, you have a 67% gain. Let's just call it 5 years since September. Almost 5 years, 67 divided by 5. You've got a 13.4% gain in Alibaba on average. So let's look at Baidu. Baidu is who I typically choose to be in over Alibaba. Okay, they're going to say down from 284 Look at that chart. All over the place, huh? Down from 284 to 115. But what this isn't showing is a 10-for-1 split at $775. So charting wise, Lance, yeah, you've got me on the chart. Kevin, it sucks. It's down from 284, 288 intraday down to 15. Well, I'm sorry, this chart, and again, chart matter of interpretation, right? This chart showing me I've got $173 upside to Baidu. Whereas your chart of Alibaba will show me I've got a 167 to 212 that I've got a $55 upside on Alibaba. So charting isn't going to help you because it's for interpretation. Let's go to some fundamentals. And I'm just going to do it Baidu / metrics / Baba. All right. So on shares traded, 2.91 million shares traded daily. It's a 10-day average versus 17.47. I would give this one to Baba, right? Baba wins because it has more volume, but that's not necessarily a good or a bad thing. 1.60 beta versus a 2.31. So that would, who is that? Who's going to win that one? Baidu. Baidu is 33% less risky than Alibaba. It is 60%, Baidu 60% more risky than the S&P, whereas Baba is 130% more risky than the S&P. Market cap. Nope, these are outstanding shares. 349.51 million outstanding shares. I'm going to 2592.18 million. Winner here, Baidu. Earnings. This one really is shocking. Earnings, $8.65 versus $4.98. I'm going to give that one to Baidu. 13.23. I'm going to call it valuation, but it's really forward earnings, right? To 33.52. Baidu's a lot cheaper than Alibaba. This is where, again, you can use some interpretation. Profit margin, 46.21% versus 45.09%. Baidu beats it on profit margin. 14.17 return on equity versus 20.42%. That one goes to Baba. And that's also going to mean that their net margin, 15.83, and the net profits, right, to 21.14 is also going to go to Baba. All right, let's see what else I have here. Insider. Insider ownership, 15.6, whereas you have 48.49. This one is a toss-up. Well, no, because ownership owns more Alibaba, so they care more. Or Alibaba is so new, it hasn't had the purchasing power to run it. Because check out this, 79.90 institutional ownership versus only 42.9. That one goes to Baidu. Here's the biggest one. Short float doesn't register, whereas you have 6.36%. And I'm going to go ahead, I'm going to give this one to Baidu, but it could be a toss-up because when you have an extremely high short float, you run the opportunity to have a short covering rally. But that short float has been increasing on Alibaba through the last 2 quarters, whereas Baidu, there is no short float, at least nothing that registers. If someone was to ask me, would I choose Baidu over Alibaba? This is what I'm going to be showing them. Your China exposure is better risk-reward related choosing Baidu over Alibaba. Alibaba came out, I think it was on Bloomberg, it might have been on CNBC, but someone came out and did a piece on on Alibaba on how great it's going to be. It's only been around for 4.5, almost 5 years. I don't see it. Alibaba is the one-trick pony. It's Amazon. Baidu is Chinese Google. It's C-Trip. It's Netflix. It's AI. It's so much more by way of revenue streams, which to me justifies its return on equity because it's investing right now. Baba beats it on return on equity, but that's because Baidu for the last 2 years has been investing. If I was going to choose Chinese exposure, that it will hit more sectors, it has a better track record and a better run, Baidu is the one I would choose over Alibaba 10 times over 10. Yes, there was a piece recently done on Alibaba. It was slanted. It was slanted just like we looked at our chart. That's why you run to fundamentals. Well, Kevin, which fundamental is most important? Well, the fact that there are only 3 million shares traded versus 17 million, Alibaba would win that on a fundamental basis. But both are over 1 million shares, so there's liquidity. Beta, risk. Baidu is significantly less risky than Alibaba by 50% compared to the S&P, by 33.5% compared to each other. Outstanding shares. It's 8 times less outstanding shares than Baba. Earnings, almost double Alibaba. Valuation, significantly cheaper. It's undervalued right now, whereas Baba's overvalued. Profit margin, it beats Alibaba. Return on equity, it does not. Return on net profits, it does not, but that's because it's investing. Institutional ownership, 79.9 versus 42.9. Institutions are behind Baba. Insider ownership, well, I put it as a toss-up. You probably have to give it to Baba because it's more owned on the inside. So there are 2 ways to look at that, though. Hasn't been in business, keeping its shares, and it just hasn't grown like an S&P 500 type company. There's too much insider ownership, too much pull on what's done, not enough say by stockholders. Short float, again, that's also a toss-up, but there's zero, an unregisterable short float on Baidu right now, whereas there's an ever increasing from 4 to 6.36% on Alibaba. Yes, there could be a snapback short covering rally on Baba, but it's still increasing, whereas there is no short float on Baidu because it's such a great, because it's so cheap is the honest answer right now. So for that individual that just joined us that questioned me about Alibaba that we're playing phone tag, Baidu, in my opinion, is significantly better exposure to China with significantly more upside than Alibaba. Any comments on that? Any comments on my on my thought process? I have Lance around for a reason. Lance just said, Kevin, you nailed it. Thank you. Any comments, though, on my Baba versus Baidu versus Chinese exposure? David, interesting comment. And Mary, I'm going to get to yours next. Wouldn't you be better buying an index or an ETF? So, good question. And there's no right answer there because it's based on risk tolerance. I'm not a fan of funds, indexes, ETFs because of some of the tricky crap that's played in them. Schedule Ks, taking money out of loss and still paying taxes on a profit that's a phantom profit. I struggle with taking the good with the bad. I want to find the best. You're not going to see Warren Buffett in an index. In fact, Buffett's comment was, you're in an index when you don't know what the hell you're doing. Can you participate in China in some of the ETFs? Something like, not the XLE. What's the China technology one? XL, no, it's not the XLF. Oh, what is the Chinese one? The CQQ, there's another one I'm looking at. But yes, could you do an Invesco exchange traded, technology one to take advantage of China technology? You could. You definitely could use it. Could you just go into a Chinese, as I'm trying to say, you wouldn't know what it is, but would you go into a Chinese, version of the S&P, one of their main market indexes? You could. You could, but it's just not, I don't know, it's just not what I would choose to do because it's China. I mean, that's the best, my best answer for you is it's China. Why would you want to go into, the Shanghai or something? Where's one I'm looking for? It'd be like 29. Taxi, pharmaceuticals, industrial sponsored HDR. No. I don't know. I don't see it. So there's a short answer. I don't see it. Mary, coming back to your comment, the way you present Baidu makes it a no-brainer, but why? And so, Mary, good question. Really, the reason why I would choose this, and it comes very simple for me, less risk, less risk. Someone else would tell you better earnings, better profit margin. Risk, 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 which really says the short float, right? More people are shorting it. Risk. I don't get into positions for how much money I'm going to make. I get into positions that have less risk. I've got 6 kids, got $1 million home, got weddings and colleges. I am risk adverse. I want to make money, but I want to do it taking less risk. So, Mary, what makes this decision easy for me is risk. I see significantly more risk in Alibaba than I do in Baidu. That's easier for me to say because it's already lost 50% of its value, which makes it a screaming buy. But the fundamentals show a lot less risk in Baidu than Alibaba. That's why I would choose that one over the other. Mary, does that answer your question? Any other comments? Any other comments that you guys have? I know one of you is here. I hear from him quite a bit. I'm always trying to get into your head. And obviously I come off kind of abrasive because I'm like, really? Really? I don't mean to. It's as I told him recently, it's his money. You're willing to ask me any question. And again, you're not underneath my skin. I just come off that way. I just come off that way with, guess what? I've always got to be right. Someone else is here that has complained and told me a bunch of times, what are you thinking? If I can go to that comment really quick. What am I thinking? I am thinking and I could do type of study. I am thinking there are much better opportunities than Altria right now. The chance is going to get up to 55 before it's going to go down and test 41, 42. $6 to the upside on $8 to the downside. I don't see it. I don't see the need or the opportunity on the Altria group. When all honesty, vaping is kind of getting taken to the woodshed right now. Vaping and rules and regulations are going to go on vaping and how it's more, what was this last stupid thing I saw? That it's more addictive than a cigarette. I kind of have a hard time believing that, but if they've got a way to stick nicotine into vapor, maybe I could see it. I don't see the positive side to Altria right now. In fact, I see the downside at 41, $8 less than I see getting above 50 in the 50-day simple moving average, getting above 52, or even getting back up to the 55 pivot point. So find better opportunities than Altria. And it's hard to do. So I'm not giving you guys all the backstory. This individual is not married to stock. In fact, this individual, I would say, would rival me on the way that they trade, on the way that they see things. I'm not sure, even though I do manage some of his money, I am not sure that I bring a insight into trading that's significantly different and or better than his own. We've been known to kind of bash it back and forth, and this is an individual that's known me long enough that he can tell me, Kevin, you know, screw yourself, you don't know what you're talking about, and I wouldn't take it personally, and he has every right to say that to me. But on this one particular stock, yeah, the highs in the last year are 63, but the news event and the opportunity looks extremely bleak. And if I can tease them, there is more opportunity fundamentally in this company than there is in Altria right now. There's more upside opportunity in Ford with the 6% dividend payment than I see in Altria. But the advantage of trading is, again, it comes down to each and everyone's risk tolerance. Some people chewed me out for years for being in Disney. As I worked all the numbers, Disney should have been where it was at right now 3 years ago. And for crying out loud, some poor people sat through me in Disney. We did pick up shares, but we're just like, well, Kevin, when is it going to happen? When is Disney going to move? And my best answer is me putting my hands up in the air and saying, I don't know. But it should do at any moment. And there's no doubt, in all honesty, that this individual can tell me, hey, I stuck in it, I picked up extra shares, and there's no doubt that it can't get back up to 63 into the future, if not higher. I just don't see it right now. All right. Any other questions you guys have? And for that individual I'm talking about, Altria, don't kill me. I haven't used you by name. But here's an example of you guys getting into my head, seeing what I'm seeing, understanding what I'm looking at and why. All right, well, hey, with that said, trade of the week, Freeport-McMoRan, protective put. I would need to do it because I need to create some cash in my account. It would be a short-term trade to take a profit. And really, it comes down to looking at some simple numbers. Cheap protection. If you look at Freeport-McMoRan and where it can go, you've got 15 to the upside, breaking 1178. For 59 cents, I still have 20 cents of profit before, if I lost everything on my long puts, 20 cents profit per share before I run into my 200-day downside at 97.50, which is about $2.50, is about 20% downside. You have an upside upward to that 14.68. Probably not higher than 13.15, that upper R2 pivot point. So it's interesting. It's speculative. It's a position that frees up cash for me. It's a short-term popper. I take my profits in that $13 range and be out of the trade. I would then, let me take that back. I'd take my profits on the stock and I'd be into an aggressive bull put on my 57 or 59 cent long puts. Guys, have a wonderful day. I appreciate you being here. I will look forward to seeing you next Monday. I should have this posted by tomorrow morning at the earliest. But a Freeport-McMoRan protective put strategy is where I would be on a trade if I had to do a trade today. Pretty interesting position. Guys, take care. Have a wonderful weekend. Look forward to talking to you next week. Goodbye.